Great to have you with us.
Great to be back.
Yeah, so let's just jump right into it. How screwed are we? No, I'm joking.
We are. This is retail. Come on.
This is retail. So what I want to talk to you about, of course, is the current environment. Of course, we're going to talk about tariffs uncertainty, but also relating it back to this audience, people responsible for retail real estate. But yeah, let's just take it from the top. Today, September 15th, like how would you describe where we're at right now? And is retail on solid footing, or do we expect some turbulence ahead? What's your crystal ball looking like?
Listen, the beauty of retail, and everyone here knows it, we're always screwed and we're always optimistic. I mean, that's what this is, right? Like this is the beginning. By the way, I've got my harshest critic in here.
Yeah.
We just got a laugh within 30 seconds. He told me I was going to get none. So like we're already winning. So there you go, Asher. My harshest critic is my 10-year-old son sitting right up here.
The future analyst?
The future performer. After last night's comedy show, he wanted to jump up. So this was.
Uh-oh.
He was ready, my guy.
He probably could have done better than the headliner. So maybe I'll get your number after this.
But we all know it. Retail is retail as old as time, right? If we want to go with puns. But this is the business where you take something that someone has worked so hard to get their dollars. You need to get them to part with them. Mm-hmm. That's really hard. It's also the simplest thing you've ever done. And so the beauty of everyone in this room, and the reason why I love being here, in addition to hanging out with you, is stores are the best part of retail.
Yeah.
Because stores are the way it was supposed to be done. E-com helps. E-com's convenient. There's other ways to do this, but stores are the way where you actually can represent your brand in the strongest way and also the most profitable way when done well.
Okay. But consumer sentiment seems shaky, yet spending's holding up. Like, how do you explain that disconnect?
I like the layup. So I, rightly or wrongly, am a huge proponent and advocate for the fact that consumer sentiment has nothing to do with consumer sales. And so we have this monthly thing where we hear about consumer sentiment survey. Show of hands, who has ever taken a survey before? Bullshit, come on. Sorry, I'm allowed to do that up here. For everyone who just lied, right? Who has lied on said survey? If anyone raised their hand initially, you'd be still having your hand raised up. So we don't tell the truth. You want to get through them, but at the end of the day, the U.S. consumer is overly resilient, healthy or not. Mm-hmm. And so what I think we are very inclined to say things are bad, and there's no question things are a lot worse than they were, and yet spending is happening. All the holiday surveys are coming out now, which again, I don't think mean a whole lot. People are going to spend. And the issue about holiday spending is, are we up 2.7 or 3.2 or 4? It doesn't mean anything. And so all the time, it's our collective job to create a product and a service and an offering that is compelling to the consumer. And I promise you, do that, they will spend. You're not always going to be the winner, but someone will. Mm-hmm. And so the fascinating thing was during COVID, everyone won. Right? At first, no one won, and then everyone won. But that's not business either. It's all about market share. And so ever since, I don't know, call it 2 years ago, we started believing, like when LVMH started telling us things were a problem, then everything hit the fan, right? Because then it was like, oh, even high-end, even luxury is not working. But that wasn't the case because Prada and Hermes were doing well. And so when Walmart does well and Target doesn't, right? Think about who you are, there are times when you're winning and there are times when you're not. That's how business is supposed to work, and that's what we're seeing now. We're seeing businesses that are offering compelling product, whether it's the right price, whether it's the right value proposition, whether it's the right storytelling. I mean, that's what makes you unique. But we're seeing revenues grow.
Okay. So of course, at the start of the year, when I first reached out to you, about this event, of course, tariffs were the number one thing, especially at RetailSpaces spring. And you've said, of course, that tariffs don't necessarily raise prices. So can you unpack that? I mean, you posted quite lengthy about that on LinkedIn.
Yeah, so I'm not an economist. Economists are much smarter than I am. I have learned to dislike economists lately because I think economists work really hard to predict the past. They're not all that good at it. And so what I mean by that is we think about life in the context of a classroom. We think about life in what do we learn in terms of, again, Econ 101 or whatever it is, and supply, demand, tariffs. Yes, according to Ferris Bueller, tariffs will raise the price of everything. Right? That's just what happens. But that's not reality because tariffs are just another cost input. And so what I've been trying to push is this idea that tariffs raise the cost of goods. They don't raise the price of goods. Compelling brands, compelling offerings. The consumer raises the price of goods because they have to be the one to take it. Raise price all you want. People don't take that price. What's going to happen? Discounts. I promise you that. And so that's this idea where I think at the end of the day, what's the best way to fight a tariff? Raising price. What's the best way to raise a price? Being a great business, having a great brand. I think that's the delta where when supply chain issues happen, when cotton costs go up, when labor goes up, it's not politicized, but it's the same idea. It's a very important input cost going up, and you have to figure out how to adapt and play within it. Tariffs just happen to be on the political sphere, so we talk about it all the time. but it's a cost input.
Yep. So one of the conversations this morning on the panel, Rob from Kroger, of course, was mentioned about the uncertainty, right? So the uncertainty is what caused more of the issue than the tariffs. But what are you hearing on earnings calls specifically, like when you're hearing from CEOs, like how are they navigating this? Is it still, you know,
It's a dance,
it's a dance?
right?
Is the dance still as topical today as it was a few months ago, or is it?
Yeah, I think it's as topical. I think hopefully the idea is we have a little bit more information, but I think what everyone keeps realizing is when you think you have the information, then it's the rug's pulled out. And so I think the difference between cotton costs and supply chain and whatever else is that you just don't know what you're fighting. And so this idea, I mean, I agree. I think uncertainty of tariffs has been much greater than the severity of tariffs.
Yeah.
And so I think that is an important point. I think if everyone knew what the level was going to be, it would stink, but we would adjust and we would adapt and we'd figure out what we need to do, or we go out of business. It's one or the other. I think right now it's not knowing what you're supposed to account for. Am I supposed to nearshore? Is there a country that's protected? Is there not? Like, is there a product that's going to be okay? I think not knowing is what makes it challenging. And even when we think we keep getting the we now know, I think we still don't. And I think to your point about earnings calls, I think there is a dynamic where timing matters.
Mm-hmm.
And I think that the fact that everyone kind of like all the inventory for the first half of the year, we've been talking about tariffs, but it hasn't actually hit your P&L. The back half of the year is when it does.
Yeah. Okay, so let's shift now to physical stores. Similar thing, you hear all these earnings calls, kind of like, what are you hearing just in general, like CEOs kind of perspective on the role and the value of a physical store? And I know that's kind of tough because we've got all different categories of retail in here. So I guess certain areas or segments struggling more than others, but.
Listen, I think that's fair. When's the last time I was here? 2 years ago? 3 years ago?
2022, yeah.
Yeah, so
3 years ago.
it's much.
Remember we were talking about the metaverse?
I know, yeah.
We're like, the metaverse is going to be a thing. This is like, whatever happened to that?
I didn't say the metaverse was going to be a thing, thankfully. I get a lot of things wrong, not that one. But it was harder to be in this room earlier because there was a period post-COVID, it wasn't that long, we finally came back around to it, where you did have to fight and say stores were good, and you had to justify your dollars. I think since then, I think we've come back to this notion that no, stores when done right are really, really good.
Yeah.
And I don't think it's a fight. I don't get into fights on CNBC anymore with, oh, you want to do in a store. Right? It used to be, I would say, sell something in a store, and that sounds like the most antiquated thing in the world. And people forgot the fact that stores, you literally turn, e-com takes a customer and forces it to be an employee. Stores take that employee and relies on the customer to do it. What do I mean by that? Customers, your pick, pack, ship, fulfill, return, reverse logistics, everything, right? They grab something off a shelf, walk to the cash wrap, pay it, walk it out to their house. They are the shipping vehicle. Like, you want that. It's great. And that's not saying anything about the branding. So I think right now people have and also I think last time I was here, in addition, we had metaverse on one side and HVAC on another. I think like no one could, like people were like hoarding HVACs. I remember being in one of the breakouts where it's like, give me an HVAC and I'll buy like 12 of them. I don't need 12 of them, but I'm gonna like go on the black market and auction them off. Like, that's
the supply chain issues, they were top of mind.
So I think the reality is everyone in this room, I think, should be breathing out a sigh of relief in terms of I don't have to justify to my CEO or to my CFO, probably more so, why I should be opening a store. Yeah. I think now you have to figure out how do I plan the demand and different elements around there.
Yeah, well, so I know one of the trends we see in certain things, and Lee Peterson from WD did a presentation on it last year, was about, a lot more stores going local as opposed to into cities, and I know that's a trend there. But average store footprints, I mean, it seems that a lot of them are going to shrink and store there. So, I mean, what's your thoughts on that? Do you think
Yeah, that deep sigh was I guess not intentional, but I guess it makes sense. Listen, efficiency always matters. Productivity always matters. So smaller will always be better if you can operate in small, but tell that to Walmart, tell that to Aritzia. I mean, like a lot of like if you have a compelling reason to not be small, definitely don't be small. I mean, but plenty of flagships do a great job and plenty of big box supercenters do a great job. If you can justify sales per square feet, whether it's literally dollars or whether it's everything else in terms of distribution and whether it's in terms of brand, like again, there's a lot of different pieces there. There's no one size fits all formula. But I would not say, I think the beauty and danger of retail is it's very easy to take that broad brush. And whenever you take that broad brush, you're making a mistake. Like that's just, that's my one rule. And I think that if you have huge space and you're not using it, figure out a way to carve it up, rent it out, get more efficient because you're overspending. But that doesn't necessarily mean everyone should shrink down.
Yeah, okay. So, again, thinking that you were here a few years ago and it was like, wow, we're due for a recession. We're due for something. So you're optimistic over the next 12 months?
Yeah, people don't normally, I do work for an investment bank, so people don't normally accuse me of being optimistic, but I am, because I think that this idea of figuring out who's going to win, there's always someone who's going to win. I really do believe that. And so the last time I was here, we were also in this whole D2C craze. And like, that's when we talked about
Yeah.
my team, this was all my team, and I'm very thankful to them, wrote a report, D2C is not all it's cracked up to be, was our title, because we try to be catchy every now and then.
And that proved to be
And,
very accurate.
and I got into huge
Yeah.
fights. I got into huge fights with Nike. I got into huge fights with digitally natives. And the idea, and this was wholesale versus D2C, not digital versus stores. And the whole argument was everyone's scared about having a partner, but the reality is we have partners for everything. You just have to have a good partner. And so I think that this idea of recognizing that the consumer is still spending means we get to be optimistic in almost any environment. Doesn't mean we're not in the stimulus era was amazing, right? Like it was just free for all, and that felt great. All you had to do was reach up and you would catch any low-hanging fruit you wanted. So yeah, we are in a harder environment. You actually have to be good. But I would make the argument that if anyone here is ambitious and believes themselves to be good, it's much better to be a good operator in a tough environment than it is to be in a good environment. In a good environment, the bad operators are winning too. In a good environment is when you set yourself apart. In a bad environment is when you set yourself apart. That's when really strong operators shine.
Okay. So the only other thing I guess I want to bring up is we talked about inflation, we talked about the uncertainty, but the other thing is the dollar's down around 12%, right now. So when you couple that with inflation, and if the dollar does continue to go down, let's say if it went down another, say 8%, 20, you think that would be the big pressure on the economy and just retail in general?
So listen, in 2008, right? Because everything I'm saying sounds like, oh, everyone's always going to be great. Like, listen, like obviously in 2008, almost everyone, not everyone calmed down, but plenty of businesses calmed down. And so there was not this moment, but it didn't last as long for the winners. And so I think if you really are thinking we're entering a recession, by the way, if anyone here is Walmart or Target, I think the cloud of the recession is your fault. I think that I think everyone had their Peloton moment, but you guys didn't want to acknowledge that you had it too. And so as everyone got a little drunk on discretionary spending in 2021, we all bought too much inventory thinking that was never going to stop. Again, use Peloton as the extreme. Then when it stopped, the question was, is it you or is it me?
Mm-hmm.
Most companies had to acknowledge that Peloton misforecasted their business. Walmart, Target told us, no, the consumer is starting to pull back. And so for 4 or 5 years, we've been waiting for that pullback. It just hasn't happened. At some point, yeah, listen, I just got back from Glacier National Park. You see these huge open areas of tinder because you need to clear it through, right? You need a fire to be able to then have growth afterwards. So at some point, there is a step back. And again, I hate to say that, but that's reality. The question is how long it lasts, who's prepared for it. And to get really biblical for a second, Joseph made who he was in the years of famine, not in the years of feast.
Mm-hmm.
Prepared in the years of feast, but we found out who he was in the years of famine. That's when you find out, are you prepared? So that's kind of, I think it's fair to assume we've got a ton of macro hitting.
Yeah.
But you all run micro businesses, not macro businesses.
It's all positive.
It's
all
not
great, guys.
It's hard.
No.
You have to be the ones to win. There are plenty of businesses that are not winning. There are plenty of businesses that are seeing. I mean, look, again, Nike versus Hoka, right? Like there's opportunities. Like the largest, most powerful ones can still see some pressure points. But Nike can obviously come back. And so I think that's the idea of internalizing this notion of if you just throw your hands up and say, it's a tough environment, macro is tough, whether it's the dollar, whether it's labor, whether it's inflation, there's always going to be something. And so the question is, can you adapt? Can you play within them? I don't mean to belittle the challenges. There are going to be big challenges, and for certain businesses, they are existential. But if you can figure out the reason I love this sector, the people do what I do in every sector in the world. I love it because it's qualitative and quantitative. I love it because in retail, we all are consumers. And that makes it very interesting because it's very easy to get sucked into our own prejudices, our own biases. The reality is there's so much data. So look at the data, find out which of the problems are real, which of the problems are fixable, and which of the problems are psychological, and benefit from the fact that people are going to jump into that psychological problem when the reality is the numbers can give you an answer and a way out.
Okay. So I'm going to ask one more question just to kind of peel back to think like, do you see anything in the coming decade that you think will put pressure just on? Is there anything that you think looking further out or nothing that comes to mind?
I mean, listen, we're in a tough world. Like, talk about optimism, where obviously it's been a very heavy week. So I think that there's plenty of concerning things vis-a-vis humanity, and humanity does trigger spending. And so, like, I think that there's plenty of things we can look at and say, are we living in the perfect world? I mean, I want to create the perfect world for my 10-year-old right here. Like, that's really nice. But yeah, no, I think that we're seeing how long it takes to say AI. Is that the question? Is that what we're getting at? No, so I think
we're going to hit on AI. Yeah.
But there's plenty of things that are changing. I think the reality is, shy of some kind of cataclysmic event, the consumer will always need to spend, whether they're buying staples or like discretionary or staples. And so, no, I think that generally speaking, there's nothing that makes me wildly concerned on a prolonged basis about the industry. That does not mean I don't have very hard conversations with individual retailers.
Yep. So what is your take on AI in terms of just overall impact? I mean, of course, on earnings calls and everything else, I'm sure that that's the one word you've probably heard more, well, talking about AI the most.
You can't spell retail without. So
Yeah,
I think that
exactly.
listen, anytime, in addition to broad brushstrokes, we like buzzwords, and that's every industry because buzzwords allow budgets to be spent without people being fired until the buzzword goes away. And so figure out what your buzzword is and then realize that it's probably not as good as it sounds. AI is important. AI matters. It certainly
Of course.
does. But AI is a tool. And so the same way that the D2C craze, this was like one of the points we did with the D2C, but the D2C craze turned businesses from what they do to how they do it. The identity became, I'm a D2C business, not I sell mattresses, right? Like what does a mattress company have to do with a company that sells coffee mugs that tell you the exact temperature? Nothing, right? I mean, but they were both D2C businesses as opposed to the way we normally segment things. And so I think when your identity, when the buzzword becomes your identity is when you're a problem, unless you're the AI provider, then
Of
it
course.
certainly is your
Yeah.
identity. And so for the people in this room that are not the AI providers, yeah, of course you have to use AI. But the same way that you would use an inventory system, like any allocation system, any back office, any vendor, any supplier, this is what they're doing and figuring out where you want to do. I know like the whole McKinsey thing of what they say, like only 5% have really had some efficiency or efficacy or something. I don't know what the number was. Obviously, McKinsey is very incentivized to have AI not really work. So
Yeah.
that makes a lot of sense. But I think that this idea of you certainly do lose things at this point when you give over front of office. So figuring out where you're willing to loosen the reins versus not will
Yeah.
be the story.
So outside of AI though, what's the buzzword or the thing that you hear the most that you'd get rid of?
So AI is today's. We've gone through a bunch of different iterations. Like AI is today's Web3, obviously, from like the last time I was here.
Yeah.
I think that one is really the full encapsulating one right now. Oh, choiceful. I hate the word choiceful. It doesn't mean anything. Like,
Choiceful?
yeah, consumers are choiceful. You hear everyone saying that. Like
Yeah.
consumers are always choiceful. Like they choose what they want. That's what it means. So
That's
that's like a weird
pretty
buzzword
obvious.
that we get. Yeah. So it's like, I don't know. It's just like new thing that people have to grab from the lexicon. But no, AI is the one. So that's
Mm.
the.
So I got a question that's topical just from today because Trump said that he is going to advise that U.S. companies no longer have to report quarterly earnings, obviously pending SEC approval.
I like you
Good-
say obviously. Is anything that he says obviously needs approval? Like that. That works.
yeah, it needs approval. So what's your hot take on that one? Good or bad?
Bad for lawyers and accountants. I think.
Bad for your CNBC appearances?
I like it. Listen. I think that earnings get an interesting rap because I have a lot of friends in the corner office that will yell at me on a regular basis in a fun and not fun way, saying your breed of human is the worst. You force us to be, or you're so short-term focused. You're ruining my stock. I'm like, how do you know I'm ruining your stock? They're like, well, I see my stock moving. I'm like, well, then you're just as short-term focused as I am, right? Like, don't look at your stock day to day, and or don't call me short-term focused because the point I firmly believe in is the numbers will bear themselves out. And so if you firmly believe you're a long-term focused person, ignore the day-to-day in your stock, and it will work out. The stock will always catch back up. And so the point is, when does the stock catch back up? Well, it catches back up when the real information is disseminated. So if you eliminate quarterly and go to half, right, which is the general idea, and it's kind of a European focus, theoretically what that does is it probably makes it more volatile because the news is dramatically more, it's much newer at that 6-month option. Realistically, what it does is it means every hedge fund that pays for all your credit card data will have their still very real-time data, and the ma and pa retail investor will get it every 6 months. And so it probably creates more of a divergence in information flow. But if we separate that, more information is always good as long as it's the real information. And so the problem is if the information, the issue with quarterly is that it does influence. It changes the decisions. If you know you have to report quarterly and you believe you're going to be judged against it and your job may be on the line, you're inclined to run it for the quarter.
Mm-hmm.
If you're not inclined to run it for the quarter, then just giving me a quarterly update doesn't, it's nice, right? It helps me update my model. But you all are seeing your information on a daily basis. No one's telling you not to look, right? Like it's up to how you decide to run your business.
Got it. Got it. Okay. Just looking on time here. Are there any certain categories of retail that you think are weathering things better than others without, worrying about insulting certain categories in the room?
I like to think I'm nice, but when I get on stage, I forget. No, I think that I told you not to make broad brushstrokes, so I'll ignore my own advice. I think generally athletic and beauty are pretty good, stable, not staple purchases. That was like a weird sentence, but
Yeah.
I think athletic and beauty constantly have newness, constantly can charge more for newness, and constantly have replenishment. I like replenishment. So if you're a staple business built on replenishment and have some pricing power, you're not just a volume play, or you're a discretionary that has some echo there. Like the ones that can straddle both. Need-based businesses are very big, low margin. Want-based businesses are smaller but high margin. If you can blend both, everyone needs to wear shoes, everyone needs coffee, and everyone needs to communicate, but it doesn't have to be Apple phone, doesn't have to be a Nike pair of shoes, and it doesn't have to be a Starbucks cup of coffee. That's where you get really big brands. And so anything that fits into that general mold is how I think about what's special. More often than not, I think that tends to be athletic, and I think it tends to be beauty, but you can do it anywhere. Like if you're really good, you have the ability to own that business.
Got it. Interesting. So athletic and beauty. Now, again, back to this audience, of course, most people here, real estate development, thinking about, how many stores to open that. So anything that you would say to them to be thinking about, what's one thing them to keep top of mind? Um,
I think what's really cool about your job is that what is a variable cost to you is a fixed cost to your parent. And so what I mean by that is, let's stick with HVACs for a second. When your job is to open up units and open up locations, every unit is a variable cost because it's just what's the cost of doing your business. And so from your perspective, that never gets better, right? Or you kind of think about it from that scale perspective. From the parent's perspective, you're opening up the location so that there's sales in perpetuity. And so when you're variable cost, you think about things differently when it's a variable cost versus a fixed. And so I think it's a very unique perspective that you get to have where you have to spend the same amount, again, hyperbolizing every box, but knowing that the person who's the reason you're doing it is to then make it all fixed, is to then make marginals, to then continue to make more money with each incremental dollar. And I think if you can take that perspective to the CFO, it's a really powerful, persuasive vehicle that I don't think people normally do. Because the best thing for a growing business is to lay down fixed costs and then be able to leverage them. And I think that's a very unique, again, it's something that I talk about when I talk to the real estate side. And I don't tell the CFOs because I'll let you guys do it. But I think it's a powerful tool. Like variable versus fixed costs are very important when you're growing a business.
Okay. And one personal question about you. So again, I see you on TV, we talk, I read what you're saying. At one point, you say, I just want to bury my head in earnings reports and focus on retail. What made you pursue that path? And I guess I think about that because your son's sitting here watching
Yeah,
us. So
no, I love that. I thought you were going to ask, why do
I
I
was going
look?
to ask you about your hair.
Why do I look so different than my picture? And like, it's like saying it's really me. No, I love it. So I've got my real answer and I've got my podcast answer. My real answer is I stumbled on it. It was a total accident. My podcast answer is, and this is all real, this is all true. My grandfather came back from Normandy. He opened up a shoe store, tiny town in Pennsylvania. If it was not a tiny town, I probably would be on the other side of this because he was the best retailer I've ever met. And I grew up with him where it was a total one of those people that understood that retail is not about what you're selling, it's about who you're selling to. And he knew, supposedly, the lore goes, I've never challenged it and I don't really want to, but the lore goes, he knew everyone's shoe size in his tiny town in Pennsylvania. And it was a really special store and he was a really special man. And he influenced, I grew up in retail, I would say. And I think what I loved was taking that fusion of the qualitative and just blending it with the quantitative and being able to say, okay, the numbers don't lie unless they're fraudulent. And so I can now take both of those. Retail is my passion because of that. And what was really special was his apprentice. So he had just one store. He sold it to a kid that he kind of helped foster. And I think he's taken it to maybe 20 to 40 locations. I don't know the exact number now.
Oh, wow.
He called us a couple of years ago. He was being inducted into his county hall of fame and he asked us to come sit there with him. And so that was a special full circle moment.
Oh, awesome. Well, we have time for one question. Does anybody have a question for Simeon? Can't see you out there. You got one right there.
So it's a really good question. And it's a great flag to everyone that I didn't answer any of Michael's questions. I just tried to sidestep them. So I appreciate that. So thank you. No,
Thank you, Lena.
the other thing I would say before I try to actually answer is that I lose my Wall Street card for saying this, but I really, as someone there, like you shouldn't be doing stuff because you committed to Wall Street. So I just want to throw that out. Like no one in my seat agrees with what I'm saying, and most people get upset at me for saying it. But I again, because I already threw them under the bus, we'll go with Peloton. Peloton did stuff for Wall Street. It doesn't work out, right? And so ultimately, if you can run your business, you'll get dinged. And what you need to make sure is that your investors or your stakeholders or your board isn't going to pull the rug out from under you personally in that interim. If you really believe it's going to work, push it, like make it work. So that's my separate. But in terms of your question, it's a really important question that, yeah, you are going to have to account for your costs. It's not like manna. You're not like just randomly finding dollars, but they are what they are. And so the question is, it's your job collectively to find that cheaper HVAC, to find some better sourcing, to figure out if nearshoring makes sense, to figure out how you're going to play with the new tariff environment once you have a strong enough belief of what it's going to be. But you don't do that if you can't have consumer demand. If you are not going to be able to sell product, having the cheapest, most productive, not productive, most efficient build out isn't going to help you. And so I think my point is, yes, it's everyone needs to figure out and should always figure out. And I definitely did not mean to belittle it. So hopefully that was not the point. It's your job to figure out how to make optimize costs, whether it's because of tariffs or whether it's because of regular day to day. It's someone else's job to figure out why you're doing that, how they're justifying any of the spend in the first place, because you need that cash flow coming through, and that cash flow is because the customer's walking in the door. Does that make sense?
All right. Well, listen, thank you so much. Thanks for joining.
My pleasure.
Yeah.